Hey everyone, welcome back to Corporate Decoder. Today we're diving into Hammer Fiber Optics Holdings' latest quarterly report, and let me tell you, it's a wild ride. This company is trying to juggle so many things, it's like watching a clown car at the circus. You'll see what I mean in a moment. This report gives us a peek into Hammer Fiber Optics' situation for the 3 months ending in October 2024. They're in both financial tech and wireless telecommunications, but recently they sold off one part of their business. So this report is a tale of transition. Keep watching, and I will tell you why their juggling act might be about to drop some balls. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, where you can chat with other smart folks about this stuff. This Form 10Q covers the period ending October 31, 2024. Hammer is telling the SEC and everyone else how they did. They are a smaller reporting company, so we won't get as much detail as with a giant corporation, but there's still plenty to dig into. First, a little background. Hammer Fiber Optics Holdings is a Nevada company. They are focused on financial tech and wireless infrastructure. Basically, they want to move money and data. As of this report, they have one active subsidiary, HammerPay USA, which owns the important parts for HammerPay. HammerPay, they say, is about swift, safe and secure digital money transfers and banking, especially in developing countries, but they used to do other stuff too. A few years back, they had a spectrum lease with Verizon, but that ended. They also shut down a data center in New Jersey and a data communication service in Sierra Leone. Now get this. On August 7, 2024, they decided to sell their telecommunication Viper networks. The deal included things like First Point Communications and American Networks. In exchange, they got back stock in their own company that Viper held. Think of it like trading a used car for some company shares. I will talk about the meaning of all this later. Now, let's dive into the numbers. Remember that this report is unaudited, meaning the numbers haven't been checked by an independent accountant, but they still give us a useful snapshot. Looking at the balance sheet, we see cash is super low, $26,052, while it was zero as of July 31, 2024. It's barely enough to keep the lights on and barely enough to get the business going. This company is very cash strapped and needs money. Property and equipment is also tiny at just $2,540. However, they do have intangible assets, things like customer lists, worth about $2.6 million. So the little value they have is not in physical things, it's in ideas. On the liability side, they owe people money. Accounts payable are about $65,000. But the big number is convertible notes payable to related parties of $3 million. This means they owe a lot of money to insiders, and those debts can turn into stock. All that debt leaves them with a negative stockholders' equity, aka a deficit of $1.3 million. Hammer Fiber Optics owes more than it owns Accession. Fiber they do the last 3 months. Check out the income statement for the last 3 months. No revenues, zero. Operating expenses, however, are about $355,000, mostly from admin and amortization expenses. The operating loss, therefore, is also $355,000, mostly from admin and amortization expenses. The operating loss, therefore, is also $355,000, mostly from admin and amortization expenses. The operating loss, therefore, is also $355,000. They also have other expenses, like the change in value of some warrants they issued. After all the deductions, the net loss is about $435,000. That translates to a loss of 1 cent per share. Not good. To give you an idea, net loss for the 3 months ending in October 2024 was $435. Bottom third, $939. The same period of the year before was only $256, so it was much worse. The cash flow statement shows they burned about $344,000 in operating activities. They got some money from related parties through convertible notes, about $995,000, but they also had to pay back some convertible notes totaling 686 hast of $313,862, leaving the company with an increase in cash of $313,806 to $5113 debt. Overall, their cash position decreased by about $13,000. This paints a clear picture. This company is losing money and needs to find cash somewhere. Also, note here in the statements of cash flow that commitment shares issued is zero, but a year prior it was over $100,000. It's hard to know the significance since it's not mentioned, but it clearly means things are changing year over year. Digging into the notes to the financial statements, we find some interesting stuff. First, they say these numbers don't have all the details you would find in a full financial report, so take it with a grain of salt. Also, they have to estimate some numbers, like the value of their intangible assets and warrants. Here's a big one. There's substantial doubt about their ability to continue as a going concern. This is not good. It means they might not be able to stay in business for the next year without more money. They have been losing money, and their current plans might not be enough to fix it. They need to either increase revenues, cut costs, or find outside investors. This is a big warning flag. Also, the company admits they had to restate prior financial reports. That means they had to go back and fix mistakes. The mistake was about amortization expense with some of their ideas, such as their software and customer list. This just means they previously weren't calculating some expenses correctly and had to fix it. It may not sound like a lot, but these restatements can shake investor confidence because it means the company may have poor accounting practices. Or worse, going back to that sale of their telecommunications stuff to Viper, they are calling that discontinued operations. This is the divestiture I mentioned in the beginning. The deal closed in November. They got back 2.5 million shares of their own stock from Viper. They will now concentrate on their fintech business. They have to value some of their stuff based on fair value, and this depends on market data and their own estimates. This is relevant to things like their warrant liabilities. It's worth noting that they use level 3 inputs to assess the fair value. These are unobservable, meaning it's mostly based on their own ideas. They have a lot of convertible debt, especially with related parties. It can turn into stock and dilute existing shareholders. Finally, they mention some old legal claims against one of their subsidiaries. They don't seem to be a big deal at this point. So what's the story here? Hammer Fiber Optics is a company in transition. They sold off a chunk of their business to focus on HammerPay, but their financials are shaky. They're burning cash, relying on related party debt, and there's a real risk they might not be able to continue operating. It's a tough situation. From a Warren Buffett perspective, this company isn't looking too hot right now. Lots of debt, negative equity, and a questionable ability to generate profits. Selling off the telecom side is the right move for a clean balance sheet and laser focus, however it comes at a cost. I don't see any clear competitive advantages here. They're going up against established players in both fintech and telecom. Right now, it looks like Hammer Fiber Optics needs a Hail Mary to turn things around. Alright, that was Corporate Decoder's take on Hammer Fiber Optics' quarterly report. A company trying to pull a rabbit out of a hat while standing on a tightrope. What do you think? Is HammerPay the future, or is this company headed for trouble? Drop your comments below. If you found this breakdown helpful, please give us a like and subscribe. Don't forget to join our Discord channel linked in the description. Thanks for watching, and see you next time.